Hello, 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 hello. Test, test, test. Does this mic still work? I haven't done a stream in like a month. Just gotta dust off the cobwebs here. Gotta mute my own stream because it's getting some reverb here. We'll give everyone a couple minutes to get in, and then we'll start the stream. But I just wanted to make sure like all the stuff is working. The audio levels are good. Video's good. Bitcoin's crapping its brains out. Okay, did everyone have a good Thanksgiving? If you're an American, celebrated in true American fashion by eating to complete morbid obesity. It's the American dream, bro. All right. My chair's not grinding yet. Yeah, you're not gonna hear my chair grinding yet because I got a new mic. It's not gonna pick up. Can you guys hear my space heater in the background though? It's super cold here, so I have like a space heater that's just like 2 feet away from me, blasting at a maximum heat on my feetsies. So, can you guys hear it? If you can, I'll turn it off. But otherwise, we'll get started. All right. So let's get started here. So I'm gonna be using Bitstamp to chart this because with all this volatility, it's really hard to find a consistent chart between BitMEX, Bitfinex, Coinbase, and I know you could use the liquid index or whatever, but I think it's useful to see what actual exchanges are doing because that's where people are placing orders and such. So I'm going to be using Bitstamp. Just keep that in mind. And we'll get rid of this guy here. And we'll throw the cloud up. Okay, so we got the daily cloud, or the weekly cloud here. 200 EMA and the 50 EMA. And you can see that we just blew right through that 200 EMA very quickly. There was like no stopping so far. And we've been on this brutal downtrend over the course of like a week and a half. So let's take a look at this guy. Okay. So I'm actually going to get rid of the cloud stuff and we'll talk about just the EMA. Okay. So also I want to include these fib levels here. So you can see here I've got these fairly clean fib levels starting down here and going to the very tippy top of the turnbuckle there. And here's the 200 EMA right here. Okay, so at the moment, there's a very good chance that this just looks like a wick because we have a few more hours until the weekly candle closes, and we're seeing a good bit of buying pressure in the low time frames pick up, and it's actually looking pretty good. So if we look at like the daily level, and we're looking at just the price levels here. It's pretty clear to see why this price has been accelerating so rapidly. Part of the nature of parabolic trends is they don't really stop to establish and retest and secure support and resistance levels. It kind of just like shoots straight upward, right? And let's clear that off so we can see a little easier. So if we look, right, so here's our little parabolic trend. Oops, looks like shit. Parabolic trend like that, something like that, right? It's going up. We can see that on the way up, we were testing, breaking out, retesting, breaking out, and we can see that a lot of these levels kept getting retested here, here, here. But as we started to accelerate parabolically, toward the tail end of the parabola, we stopped doing that. Okay. Right after about this price level here. If you follow Tom, I think it's Dante or Dante, on Twitter, he was talking about this level right here. If you can't follow him, he's got a private account. So if you can't follow him now, tough shit. I try to repost a lot of his stuff in my Discord whenever I get a chance, but he's a really great trader. His name is Tom Dante. And what he does is he's got a very robust trade strategy, but it's pretty simple. It's a lot of it is based on what's called as a swing failure pattern, an SFP, which is like the new meme on crypto Twitter right now. For a while, it was the compound fulcrum that Peter Brandt was talking about, the compound fulcrum. And then that died right somewhere in here. People stopped talking about that. People stopped giving a shit about that pattern. And now what's all the rage is the SFP, the swing failure pattern. Okay, and what that is just basically you can think about it like this. So if you've got a price, it comes up to a level, it comes down, and then again the price comes up to a level, it wicks above, and it comes back below. So it doesn't close a new high. Say this is like a candle. It doesn't close a new high. It just wicks and comes back down. It's called a swing failure pattern. There are a few nuances to that sort of trade strategy, but in general, that's kind of the way to think about it. And what we're seeing here now is after we broke through this support level right here, now the market is rapidly pushing downward because we had no well-defined support below us, right? So the market fell very rapidly from here to here because there was no support being established there. It was just wide open spaces. Then we hit our first level of support here. Boom. Oops. Something like that. That was a pretty good line. That was pretty good. And now we're filling this void in here because, as I said before, there's no support down there. So you can see here that really the excess, or the tail end of the parabolic growth started to accelerate right here. And this is the last time we saw a support level get retested. So we can see, broke out, it retraced a little bit. It never came back and retested this level. It broke out, never came back and retested this level or this level. And you can see that's kind of what this whole thing was about. And now we're getting a second shove down, just like this, but now we're coming down to test this level right here. And clearly you can see we're shooting past it. And now, it's testing this sort of thing right here. Right? So it's kind of blowing through all these support levels here. Let me go ahead and pull back up my lines so they make a little bit more sense now. So this first blue line we can see is the last high. Here's my fib line right here, the 78, right? And now we came down and tested this little bro right here. I need to add a line right here. Boom. Very nicely too. And now, so what happens now, right? So we just cleared through 1, 2, 3, 4 lines of major support. So where do we go now? Well, it's hard to tell now, but if this support holds, this level of support holds, then we can expect to see these levels get retested at some point in the future, right? If this support doesn't hold, the next line of support is going to be this guy right here. So something around the 3K, maybe 3,000 to like 2,800 area, somewhere in there, right? That stands to reason that would be the next line of support. And if we look closer, if we look at like the low time frames, like maybe the 4-hour time frame, we see that we never really retraced at any point in time. We see that the price level, so this is the main support, right? This was the support that was established in February. And then we broke through that, and we did not really retrace much at all. You know, we did see these little micro retracements that, you know, it would like come down, it would come up, it would consolidate, it would come down, come up, consolidate. And now, right now, we're seeing the first time that we're actually seeing a legitimate retracement of a drop. So if we look at this in terms of 3 chunks, let me make this a different color. We look at this in terms of like 3 chunks. So we have drop 1. Let's make this pink. Yeah, let's see pink. We have drop 1, we have drop 2, and now we have drop 3. Well, if we're looking at it in terms of like 3 discrete little chunks, right now we're getting pretty close to a 100% retracement of drop 3, which is really good. That at least shows that A, shorters are taking profit, and B, you know, we're starting to see stronger buying hands take over. And what's important to note about this level is if we go back to like the daily scale, and we look at how far this actually retraced from the peak to the bottom, right? Peak to bottom, it retraced 82%. Okay. So this is an 82% retracement. So far, this is an 82% retracement. Historically, I think Peter Brandt has this. Let me pull this up. So Peter Brandt has compiled just, you know, a rough and dirty estimate of what parabolic retracements for Bitcoin do. Here it is. Okay, so we see here, using Peter Brandt's figures here, typically, I think we can kind of ignore. I think we can probably ignore this right here. But typically, Bitcoin markets like to retrace between 82 and 87%. Granted, this is a very small data set, so take that with a grain of salt. But we are approaching toward, statistically, where it's, you know, tended to bottom. That doesn't mean that the absolute bottom is in, but what it does mean is that we're getting somewhere close to it, right? So maybe it drops down a little bit further, but we're approaching a very important level that the people who are buying in here most likely aren't going to be shaken out by another drop down here. These guys that bought in here, they're in it to hold. They're in it for the long haul. They're in it for a multi-year position. These are the guys that were patient, okay? Everyone who bought in here, these are the guys that were patient, the ones that didn't FOMO in during this price level, right? So these are the smart investors. And if we push down another level, it's not like it's going to shake these guys out. Maybe it shakes out a few of the leverage guys, but people are now starting to buy for long-term positions because we're approaching the levels that everyone knows that, you know, historically Bitcoin likes to retrace between 82 and 86%. So it stands to reason that maybe we see another puke lower to lower lows, but we're starting to see strong buys come in because we're approaching that level that I mentioned. We're approaching the level where people are buying. They don't really give a shit about this last like 2 to 3% down here. They're like, you know what, this is good enough for me. I want to buy it, and peace out. I'll see you in a year. So we've shaken out a lot of people, and we're running out of people to capitulate. So maybe we get a few more, another capitulation wave, but the deeper we go, the hands are actually getting stronger. The buying hands are getting stronger. They're not going to be weakly held. Like these were people that were patient, and they're willing to hold for a long time. So I just talked a lot. Let's answer some questions before I go any further. Oh, no questions. Okay. Thinning of the herd. Yeah, I mean, it basically is. If you've been following crypto Twitter for more than 5 minutes, we're seeing a lot of the shills disappear. We're seeing a lot of the people who run like scammy pump and dump groups. They're disappearing. The SEC is just beating the shit out of everyone lately. So it's an interesting time, but we're approaching a level where It's no longer weak hands that are buying. We're seeing strong, patient hands, and that's a really, really key difference between what we saw, at 6,000 versus the level that we're seeing at 4,000. Do I think that 2,800 is in the books soon? Okay, so it could be. So 2,800. I mean, that would be an aggressive retracement. I think it's too soon to say 2,800. It's very possible because, like I said, this is the next logical level to test is going to be, it's going to be this guy. That's the next logical level. But I honestly do think we're at least due for a nice bounce. I mean, let's put this into perspective. The market is down 50% over the course of 2 weeks. The market dropped 50% in 2 weeks. So that was a lot of capitulation. And right now there's a lot of shorts that have not taken profit. And, if we do manage to pop above this level right here, this 41.27-ish, just this general area, if we manage to pop above that, I think we'll see, a nice push above because, like I said, we dropped below these levels of support, these blue lines here, and we never retested them. So we dropped below, never retested, dropped below the 78, never retested. And now we got to come back up and retest them. I mean, we don't have to, but it stands to reason that's just a logical move to do. Saw your video you made for 6 where you opened my eyes to Wyckoff. Thanks a lot. Made for 6. Maybe that was a typo, but if it helped you, that's great. I'm glad to hear it. So this was distribution. So what was distribution? What is this? The last 7 months or so? Yeah, so it appears that this was redistribution because next, it's entering markdown. So yeah, this was a redistribution of sorts. Or it's some sort of hybrid accumulation where this is like a short-lived shakeout. But I mean, the volume profile match. So what I'm starting to realize as I'm trading all these different asset classes, between metals and commodities and stocks and crypto, is that they all have different characteristics about them that are like somewhat unique to the asset class itself. And something that's really unique to crypto is that you have people that are just willing to accept astronomical losses because they believe in the overall picture. And I don't think you can say that about stocks or say that about, oil or metals. Like maybe gold. There are some gold ideologues, but so there's a very interesting take on the way that someone, if you're a composite operator, there's a very interesting method that you have to undergo to accumulate crypto, because you can't just use standard practices because some people are just going to hold no matter what. And then you have some people that are like, I entered a year ago, I'm going to take my 2x profit. And so the composite operator is just kind of trying to shake as much as physically possible. So it's really hard to chart this macro trading range because it's not really a trading range. We do see this really nice triangle, but it's not really a trading range. Not like in a traditional sense, because we don't see a sign of weakness here like we would see in a distribution. We don't see an upthrust. We don't see a lot of these normal trap sort of a lot of the distribution anatomy that we typically see in a redistribution trading range. So I think what we're seeing is something different. We're not seeing something that's entirely well defined at this point in time. I think in retrospect, we'll look back at it and we'll have a lot more information, and it'll be something to keep in our back pocket later on, maybe years down the road when we go through another market cycle. But, like there's no clear evidence of distribution or reaccumulation. The best guess I had was that based on the volume profile and the lack of volatility toward the end, this is characteristic of accumulation. But now we're seeing this massive drop. So it's like, well, maybe this is a new type of distribution or a new type of accumulation that we haven't seen yet, because, this is a new market. This is, a relatively new market. So maybe we're seeing something that is using other tools rather than just price action and volume to accumulate. So it's going to be interesting to look back on it in a few years and like see what could have been understood better, because it's new, it's this doesn't scream distribution in a traditional sense. Compared to your video from Wyckoff, is not this maybe an AR right now? No. Well, it depends on what you mean. Do you mean like on this like hourly time frame, like this? Is that what you're talking about? This guy? What do you think of crypto Twitter calling 1.2K, which would be the next level of support after the one you were talking about? That would be extreme, but with the traditional market shitting the bed, not impossible. So, okay, that could go one of two ways. I think it's way too early to call 1.2K. I don't see anything immediately alarming to say, hey, this is going down to here. Maybe it does, but that would be a what kind of, how much would that be? That would, if we go down to 1.2K, that'd be a 94% retracement. Okay, that would be larger than any retracement Bitcoin's ever seen. Unless something just catastrophic happens where the SEC, does something stupid and annoying like it always does. I don't see that happening on its own, but you gotta take it day by day. You can't. That's one hell of an estimate. I don't know if I believe that right out of the gate. Is it possible we don't see the clearer picture of a Wyckoff trading range because the CEO is adapting to the Bitcoin market? Yeah, that's what I was saying is, I think it's entirely possible that we're seeing a new type of trading range manifest. Just by the nature of like the psychology of crypto is different, in that you have large amounts of money accumulated way back when, back in 2012 by people who, a lot of people who just frankly just got lucky. They bought a shitload of something that they thought was going to go up and they got lucky. And now they're just going to hold on to it forever. Like there's a lot of supply that's just never going to resurface in the market. Especially not now. Like if they didn't sell here between 19 and 12K, this drop right here is not going to scare them out of it. If anything, they're holding tighter here. They're going, okay, cool. Well, we're one step closer to the bottom, and then I'll just buy more. If we enter a recession, okay. Here's a question: if we enter a recession soon, risky assets like Bitcoin could be the first one to be sold for safe assets, gold, bonds, etc. That's the only scenario where I would see us go this low. So that is one thing to consider, is that if you're a large investment bank, a lot of them are not trying to are not trying to have this volatile asset like crypto in their portfolio. But the other side of the coin is some of them are looking for added volatility as they build their portfolio around metals, right? So I think we're seeing a large capital shift between stocks to metals. And, we can get more detail. We can go into more detail about that toward the end of the stream if you'd like, because I know a lot of people don't give a shit about stocks. But in my trading community, we've been talking about this a lot. In my Discord, we've been talking about this a lot. That where like the capital flow between different asset classes and why it would be taking place. We've got a lot of these people that did really well during the crypto boom, and now we're all shifting our eyes toward the stock market, because A, it's a really easy market to trade, and B, that money's going somewhere, and we want to know if it's going toward crypto, if it's going toward gold, silver, platinum, palladium, whatever, natural gas, blah blah blah. So there's a lot of different options here. Which, let me do a shameless plug real quick. If you'd like to join my trading community, go to bitcoinschmitcoin.com and sign up there. It's a 24/7 trading community, and we've got a lot of really, really smart people all talking about the market together. Not just the Bitcoin market, but the crypto is a big part of it, because that was how it was originally founded. But we're talking about all the markets and how the capital across all asset classes is flowing. Housing, metals, commodities, etc. Right? What do you think about the Bitcoin Satoshi Vision coin being the only one positive over the last few days? I don't have an opinion about that. And it's not the only one that's been positive over the last few days. Ripple's been positive over the last few days. In a recession, people might get desperate to gamble. How do lotteries do in recessions? I have no idea. Gold weekly TR is accumulation. Yeah, I agree. And I'm trading it as such. And so does silver, and so does platinum, and so does palladium. Are you part of the smart money, like you said, and scaling in for long-term positions, non-leveraged? So I don't trade crypto leveraged anymore. I have stopped over the last few months trading crypto leveraged. Oh shit! Apparently there were people. I'm sorry, guys, on Twitch. There are some people asking questions on Twitch. Let me see what's going on over here. Let's see. Okay, so someone's asking me. Okay, so there's always one person asking this. So this guy says, rank 1 Axel says, one of the 10,000 quote unquote profitable Bitcoin traders selling courses for $100 per month. Jesus, tell me one good reason why you're not a fraud like everyone else. What's the reason to sell courses at such an expensive price if you were trading so profitable? I'm not selling courses. I've never sold courses. I think you're a little confused here, my dude. I'm not selling courses at all. Okay, so if this guy can make this much money so easily, why the high prices on his courses? What? Okay. You silly boy. I'm not selling courses. So people use excess cash on crypto, and people buy stocks to avoid taxes. Okay. Tell them it keeps out the garbage. Oh, yeah. I mean, I don't sell courses, but I do host a trading community of people who like to analyze and discuss the market together. So, I mean, I don't really know what to tell you. If you want to participate in crypto Twitter, which is full of vitriol and just pure garbage, then go for it. But if you'd like to have an intelligent conversation with intelligent people, then you can hit me up. I'm not making you do anything. I do think it's funny that people, while I'm producing something for free, bitch about me trying to produce something for money. There's something very weird about that. That in the crypto community is like it's very weird. I don't understand this. It's very anti-capitalist, and I don't get it. It's always been that way too. Like I produce hours of free content and free market analysis on Twitter, and then I try to monetize something, and people get really butthurt about it. I don't know. It's really weird, man. Anyway, what do you guys have any coins you want to, or do you guys have any before we go to any of the other altcoins? Do you guys have any questions you want to talk about? Why did you stop leverage trading? Yeah. So like, first of all, I don't have a platform to do it. So that's a big one. Um, BitMEX, like, yeah, I could use a VPN to get in there, but they recently gave me a warning. Like, I hadn't been on BitMEX in months, and I went to sign in today, and they were like, "Hey, don't do that." So I won't be doing that anymore. I don't. Literally, the only exchange I can margin trade on right now is Kraken, and Kraken has locked me out because of the lawsuit I'm a part of. I'm like, I physically don't have any avenues to do it, but also because crypto is volatile enough, and I'm prone to getting tilted with my trades from time to time. And just as a form of risk management, I'm not leverage trading anymore. And like, to be completely honest with you, my edge in trading isn't low time frame trading; it's high time frame trading. It's using Wyckoff trading ranges. It's using reversal signals on higher time frames. I'm not the best at trading low time frames. I can do it. I've done it. It just doesn't suit me well, like mentally. Um, I get tilted doing it, and I'm much more level headed on a higher time frame. So uh, that's perfect for crypto because you can trade on a high time frame and just be super profitable. And that's also why I've been trading stock options as well. Well, not just stock options, but options, the options markets as well, because that suits my trade style the best, and it's the edge that I have that makes me a more profitable trader. So, um, I don't really, I don't really have an avenue to trade leverage crypto positions, but I don't know that I would even if I did anymore. I used to, like, that was like exclusively what I was doing, but um, yeah, I don't know. I've just kind of grown out of it, and I don't really. I know there's a lot of people in my trading group that like to trade with, like to margin trade, and that's cool. I just don't prefer to do it. That's all. Okay, so here's a let me see a few questions over here. People are going overboard. People are going overboard with their 1K Bitcoin predictions. I think it's close to the bottom of Bitcoin. Uh, I mean, maybe. I think people just like to overshoot their predictions because it's easier to give a prediction in the direction of a trend than it is to give counter direction. Dude, no, you do a great job. Well, thank you, and we are very thankful. Been watching your stuff for a while. It's the only investment channel I like. Well, thanks, Lucas. There's a lot of really good people out there. I whenever I find someone that's really good, I like to plug them because I learn a lot from people on crypto Twitter and on YouTube, and so whenever I find good guys like that, I like to promote them as well. So, like Tom Dante, he's got a really good YouTube channel. You should check him out. I've learned a good bit from him as well, especially again about the swing failure patterns. He's really good at using that strategy. Do you think backed launch is being pushed back as part of the price falling harder? Slash, do you think its launch will see a turnaround in market sentiment? So okay. I saw a really good video, and I'll try to find it, and I'll post a link in here that explained. It's like a 20-minute video that explained why backed is such a why it's such a big deal. But just on a very surface level, it's a big deal because it's the first Bitcoin physically settled futures market. Up until now, all the futures markets have been cash settled. And when I say futures market, I don't mean BitMEX. I mean like CME, like the big ones, right? Like the ones that are legit for U.S. customers. They're all cash settled. And now that we have a futures market that's Bitcoin settled, that means that there's physical delivery of Bitcoin, which means that when you exercise a futures contract, that Bitcoin actually has to physically be purchased. Now, whether that's going to be done OTC or whether it's going OTC means over the counter, which means not for those of you who don't know what OTC markets are. OTC markets are basically just you can buy them from like mining companies, people that have large amounts of Bitcoin that they don't want to sell on markets. They'll sell direct to consumers. If you're like a large investment bank, if you're a futures market, blah blah blah, right? But at any rate, the fact that there's a physically settled Bitcoin futures market means that there is inherently going to be an increase in demand. So it's very interesting that it's happening right at the tail end of this sort of thing. It'll be interesting to see how it reacts, because I mean the last time we had a futures market start was right here, and that's when they just started shitting bricks for a year straight. So thanks for the answer, because I stopped leverage trading too, and try higher time frames now too. Cool. Because below 4 hour, I spend most of the time at PC and everything. Yeah. So that's the other thing, is that honestly, like, I like trading stocks and Forex on low time frames. Like, I'll trade Forex on 5 and sometimes even 1 minute time frames, with a very small exception. But those markets close. With Bitcoin, if you're trading these low time frame markets, it's really hard to like have a life, because it's just like it has this dopamine drip that just keeps it just fuels this like inner degenerate gambler part of you, that, or at least for me, maybe some people are capable of being disciplined enough for that, but I've yet to hone that skill. And it just like you just disintegrate as a human because you're just staring in front of the monitor all the time. So someone said what lawsuit? The Kraken. I don't know if you guys remember this, but this is how young the crypto market is. I don't know if you guys know, but last year something happened on Kraken. Right here. This is what's known as the Krakening. This thing. And there's a lawsuit for everyone that was trading that market, because it was a flash crash that liquidated the entirety of their exchange, and I was one of the people. So hopefully I'm going to make back a shitload of ether from that. So you're saying it happened? No, it happened on it happened on Kraken first, and then it happened on Coinbase. So here's when it happened on Kraken. I know, because I'm part of a class action lawsuit about this. And the one that happened on Coinbase was this one. But the one that happened, so this one was like way more egregious because of the drop. I mean, it dropped from 360 down to $13, but Kraken's dropped from like $100 down to $13 or something like that. Anyway, so there's an ongoing lawsuit that I'm a part of. Whatever, no big deal. Hopefully, I'm gonna get a shitload of ether back, but that remains to be seen. Do you trade fundamentals too, or doesn't matter? I don't trade fundamentals on crypto, but there are some fundamentals that I trade on stocks. Other than that, like I primarily trade technicals. Damn, I knew of this crash, but didn't know you could sue the exchange for it. Do you know why it happened? I can't. Part of the lawsuit is I can't talk. I can't talk about anything regarding what happened there. So I'll just go ahead and say that I'm part of a lawsuit, and that's it. Do you remember the good old times? Yeah, I remember the good old times. Okay, so let's start looking at some other coins. This dude's been asking me to look at XEM. What do you want, the Bitcoin or the USD market? Is there a USD market for it? Let's look at Bitcoin. When do you expect the suit to conclude? I can't say anything about it. Sometime next year, I think, but I can't. I don't know if I'm allowed to talk about it, so I'm just not going to. So here's the NEM chart. ZEM. What is this actually called? What is this coin called? There's so many fucking coins. This actually doesn't look like a bad chart. It's actually showing some good strength against Bitcoin over the past couple weeks. And it's got a nice trading range too. It's got a pretty well-defined trading range here. The fact that the lower bounds of this hasn't been tested is a little concerning. Oh, shitballs. So if this level doesn't hold, this thing's going to be in for a bumpy ride. It's going to drop a lot. But on the Bitcoin scale, it actually doesn't look that bad. I mean, it's like, it's doing this accumulation sort of thing. So crypto does these weird things. That's what I was saying. So this is part of what I was saying with the Bitcoin chart, is that a lot of the alts have accumulation trading ranges, but they're not like formal, clean looking trading ranges. So you have to kind of look at them with a grain of salt. Like right now, this is at the bottom of a trend, right? So this is at the bottom of a long trend, right? And now at the bottom of this long trend, we're not really seeing selling or capitulation while Bitcoin is selling off. So this is showing some strength. In fact, this is one part of the anatomy of it, this giant green jump where it jumps across this little, it's called a creek. It jumps across this creek. It jumps across this creek. And it's called a sign of strength. So it's showing signs of strength, but that USD chart does kind of concern me a little bit. Let's go ahead and look at Ether USD. So if we look at the daily chart of Ether USD, if this, so again, similar to what we were saying before, if this thing doesn't hold this level, well, okay, let's see. Let's go ahead and do the same thing we did for Bitcoin. So We're testing the highs that never got retested. Okay, so right now we retested the first local high right here. Boom. Okay, we see it wick down really nicely to, I think it was $98, right? So first untested low below the macro low, which is this thing. It saw a nice round of buying pressure. If this doesn't hold though, unfortunately, the next level below that is gonna be like the $57 range. But we do have this, like, we're seeing a bit of divergence first of all. So if we're looking at the 4-hour chart, we're seeing a lack of momentum in the downside. Here's a momentum indicator that I like to use called the SMI, the squeeze momentum indicator. So it's diverging. We're seeing a bit of buy volume, but nothing crazy is stepping up yet. I think it's waiting for permission from Bitcoin to do it. But we did just hit a milestone for Ether USD where it tested this level here. So this is an important gap to fill. If we can get Bitcoin to, or if we can get Ether to close back above this 130 level, that would be great. Right now we're kind of sitting in no man's land. And if we're looking at the weekly chart, a close at this level looks like shit. It looks like absolute shit because it's closing a new low. So if Ether doesn't get its shit in order, it's going to be a really rough ride because the next level below that, like I said, we'll need to see if it closes above this like 93. Let me put these. Boom. Yeah. So here are the levels right here. So we really need to see how the close. I doubt we'll see. I mean, we've got like what, 2 hours until the close of the weekly. So if for whatever reason this thing rallies up and closes above this 130 mark, 132-ish, that'd be great. But right now it's kind of sitting in this no man's land that's hinting toward more downside. So, which is especially brutal because from its all-time high, it dropped down 93%. So Jesus, it's getting brutal out there for Ether. Hey Schmitty, long-time listener here. Any chance you could look at Chainlink chart? It had very different movement to most altcoin or to most alts in the bear market and rarely gets mentioned. Yes, hashtag yes I have a bag. Yeah, let's look at it. What is it? Chainlink? What's the is this it? The QLC Chainlink? Is that what you're talking about? QLC? Oh. Oh, it's just link. Link. Link BTC. Hmm. Yeah, this is an interesting chart. I don't really know what to make of it, honestly. This doesn't look very good. This divergence into the top. Okay, so going back to Tom Dante, here is a swing failure pattern right here. Okay, so we see the high. This is a great learning opportunity here. So here's the high, and now look, it barely wicked above it. right here. Boom. And now we're seeing a large drop. So where's this is an example of a swing failure pattern right here, where you see we go up, we go down, we go up even higher. It can't close above it, and now it's retracing. And it looks like it's capitulating here. This chart is weird. I don't know, man. Some of these random Binance alts have bizarre charts, and I don't know how to read them all the time. I mean, it could be making like a much larger trading range, but like what is his volume profile? You know, it's just like, what the fuck is going on here? I don't trust volume. I don't trust volume on Binance an ounce. It just seems so artificial, and it doesn't, like, what the fuck is this? Like, what's going on here? Just a random, just a casual 10x burst in volume for no reason. I don't know. Sorry, but I personally wouldn't trade this chart. But if you bought early, then kudos to you. That's awesome. It's just not something in my trade setup that I would use. Are you still active on Patreon? I was thinking of signing up, but it shows you have only 6 Patreons. 6 patrons. In your last video there was March 17th. So my website doesn't use. So I completely have left Patreon. Their trade their trade platform. Their payment engine is dog shit. So we moved to BitcoinSchmitcoin.com, as one of my mods has pointed out. And it's scrolling across the top of the screen in the top right corner, where it says BitcoinSchmitcoin.com. Someone wants to look at Golem. Yeah, let's look at Golem. GNT BTC. I haven't tried a Golem. I haven't tried a Golem in a long time. Let's clean this up a minute. So I'm assuming you wanted the BTC pair, right? Whoever requested Golem. So Golem actually has a pretty well-defined range here, which is interesting. What is Golem? What is it? GNT, that's right. GNT. Is there a USD market for this? Wow. USD market is like toward an all-time low. Oh, it did hit an all-time low. Interesting. So here's the thing. Golem either looks like a really good buy or an absolute dog of a coin to buy. Let's see. If it can hold this support here, that's ideal. But if it breaks this, I mean, this is literally just going to go into to zero. And there's nothing below this. So holding the support level is very important. But so far, so good. I mean, it's not closing a new low. That's good. The close is above the previous weekly close. We still have time, but so that's good. But overall, this kind of looks weird. I don't know, dude. Some of these charts just look so weird because there's not enough price history on them. This guy just wants to go straight to stocks. I'm right there with you. To be honest with you, the stock market is way more interesting than the crypto market is right now. But the fuck was that? Get out of here. We can move to the stock market if you guys would like. There's plenty to say about the stock market right now. Thought crypto being boring was when the real work begins. I mean, it depends on how you define work. I mean, the fact that we broke this $6,000 level means that the next bull run probably isn't going to take place for like another year or 2 years, something like that. You know, it's like this means that we're going to enter a much longer, most likely enter a much longer accumulation phase. If we look back at previous Bitcoin accumulations, they take a long time. So if we're looking at like, if we're looking for a good analog with the last accumulation period, it's right here, right? And where we are is we just broke this, and we're somewhere in here, and it's going to make a trading range in here forever. The last accumulation took how long? Let's see. Almost a year. So the last accumulation trading range almost took a year. Susanna wants me to look at Monero. Sure. Monero. XMR, that's what it is. XMR, BTC. Let's do it. So XMR is basically doing the same thing that Bitcoin just did. It is filling these like gaps in here. It's so we look at something like something like that. We see here that as soon as it broke this level, it immediately filled this gap right in here. Right. It does have really good support here, so maybe it's got a local bottom. You know, maybe it comes down here and tests this little guy. Here might be a logical next step, but it does have a lot of really good support in here. The things that causes this market acceleration are gaps, though, like this, like these giant voids. They just get sucked right up. They get filled in. So XMR just fell down to its next level. Below this, it's going to be something like this. You know, maybe this. But this seems more likely. I see a head and shoulders. Yeah, there's a bit of a head and shoulders here. Shoulder, head, shoulder. What would be the price target on this thing? It's huge. If it is a head and shoulders. 384. Yeah, I mean that means it's a negative number. So like anytime we see this, it's like the head and shoulders clearly isn't going to make it a negative number, and it's not going to go to 0. I mean, maybe it comes close to it, but But yeah, I mean, it's hitting this nice level of support here, so it makes sense that it's bouncing here. Should I buy more? That's on you, dude. I don't ever tell people, even in my own trading group, I don't ever tell people to buy or to sell. We just look at the evidence objectively, and we come to our own conclusions. So, would I buy more? Maybe not for a long-term hold. I mean, it broke a very key support level, and I don't see a sign of like a macro reversal. So I don't like. There's no giant volume like this stepping in to catch this bottom. I see no reason to think that this is just going to stop here. So no, I personally wouldn't. Not for a long-term hold. Okay. Are we safe to go to stocks now? Last call for crypto. Okay, let's go ahead and look at some of these stock charts because these are the most interesting. So it's really easy to see when you're comparing these shitty crypto charts. When you look at a stock market chart, it's like, God, these are just so clean. These trading ranges are very clean. The price action is very, very nice, and the volume profiles look really, really nice as well. So we won't go too deep into the stocks, but we'll just do a high level overview to catch up. I think the last time I talked about stocks, we were here. We were somewhere, in this area. And I was saying that I thought that the market was going to go down hard because of this monthly Bollinger Band M top. Oops. So here's the M top. Right? And here's the first price target, and it's sitting right on it. First price target of a Bollinger Band M top is the mid B band, the B band's midline, and unfortunately, or fortunately, depending how you look at it, the next target is going to be here, the bottom band. So that could make things really interesting if we don't bounce here, if we don't find support here. The fact that we're 5 days out from the monthly close and we're sitting right on that line, and when we look at this macro trading range, it does not look good at all. Okay, so this needs to be, oops, this needs to be that. There's a large confluence of things that make this stock market look very toppy. It doesn't look like it wants to continue upward, right? So when we're looking at the metals, when we're looking at the drastic decline in tech stock, when we're looking at commodities, like it all points toward a drop, a further continuation of the downtrend. And just like what we were talking about with crypto, we went parabolic. right? With no tests of support on the way up. So if we're trying to find the analog for crypto, next move, if we do break below the trading range, would be right here. This is the next logical move if we break below this. So we have yet to have a formal sign of weakness. Not formal, that's the wrong word, but a sign of weakness that breaks the trading range bottom. Trading range bottom is, somewhere in here, somewhere with the selling climax or the secondary test. I'm calling this a sign of weakness because it broke my ice. If you're familiar with the Wyckoff anatomy, it broke my ice. Ice would be the 200 EMA. We can see it's a wavy line of support moving upward, and it broke it for the first time and now a second time. And what's really key here is the way the volume is playing with the price action. So let me get my Wacom tablet here. This is the most important part of this. So we see as we broke back into the trading range, we see very high volume accelerating down toward the low. So very high volume here into the low. And what's more is as it continued down here, we see volume expanding very nicely. Let me make this black. Yeah, we see volume expanding very nicely on the way down. On the rally, we see contracting volume again. And once again, on the way down, we see expanding volume. I don't think it's going to just go straight down yet. I'm of the opinion that we're actually going to come up and retest this support here. That's why I have this blue line here. So I think we're actually going to see a bit of like climbing upward for another last point of supply, but the evidence that's gonna support the last point of supply is if we don't see expanding volume, but rather we see maybe a high volume and then contracting volume on the way up. Maybe we retest this 200 EMA, but this is the next logical test. Is going to be this level right here. And especially with the way that we gapped down the past few days. So we gapped down, it's kind of just like hung out here. This kind of looks like it's maybe going to pop up a little bit. There wasn't a whole lot of sell volume here, even though it did gap down heavily. And of course we see this little demand line here, this green guy. So, maybe it comes down here, but I think ultimately before it does see the bottom of the trading range, I do think it sees here. But I'm playing it either way. So I have calls and puts on various markets to support the breakout of both directions. And this is just the S&P. This is SPY, even though this is the ETF, but this is the S&P 500. And the Dow Jones doesn't look much better. So if we look at the Dow Jones, so here we go. Same rationale with my anatomy here. So we see bottom of the trading range here. This red 200 EMA is going to be our ICE. So this is our ICE. And here we get dunked below the ICE. We rally to the midline of our supply and demand channel. Very clear. But again, the way in which we rallied is the dead giveaway here. So we see very high volume leading into our first test of the ICE. Once we break below the ICE, it's on expanding volume. The rally is on contracting volume. And then right as we reject this level, we see high volume rejection here and here. Okay. Again, just like the S&P 500, we didn't really see a stellar amount of volume here. Again, that it should be noted that this candle was Black Friday. It was an early market close. The market closed at 1 p.m. Eastern time. So it was an early market day, so maybe that accounts for a lot of the volume. But similar to the S&P 500. So this is actually, I need to relabel this. This is our preliminary supply here. Similar to the S&P 500, I do think we're going to see a retest of this and possibly even the 200 EMA before a formal sign of weakness below the trading range here. If we draw an analog here, the next logical spot to drop is going to be this guy right here. So if this breaks below the trading range, maybe it'll do something like this. You know, it'll break down, last point of supply, and then this will be the next logical spot here. But you know, this is all crystal ball-y right now. We need to see how Cyber Monday plays, and also the monthly close plays. But I don't think it's just going to completely drop down just yet. I think it has a little bit more bounce in it before the real mayhem takes place. Where do you think the crypto market is headed next in general? That is a very vague question there, Jack. Can you be more specific? Like, I'm not really sure how to answer that one. And then moving along to Fang. Fang is a call that I'm actually like really proud of because I was like the only one. I was like the only one who called this, which was kind of surprising. But if we're looking at Fang here, let me change this color. So Fang was on a parabola going northbound at 200 miles an hour, and it showed a major sign of weakness when it could not maintain its momentum upward, and it broke down here. Most importantly, right here. Okay, so if we look at the daily chart, we see that the parabola for Fang broke. It could not maintain the upward momentum, and that's why we're seeing this massive drop downward. Something that's, of course, to be of concern is that just like what Bitcoin did, this is the nature of all parabolas. You know, they have the slow buildup and then boom. And it's this tail end part of it that makes it the most brutal, because then you start skipping supply and resistance zones. So if this level doesn't hold here, then the next level is going to be here. And that's a big drop. You know, maybe we see a relief rally here and we make it like a head and shoulders thing, but I think ultimately this thing is going down. I mean, we popped a decade-long parabolic rise, and that never ends well. It hasn't. It's just been getting dunked. All these tech stocks have just been getting shit on. Even on good earnings reports, they've just been getting fucking wrecked. So it's not looking good. And now, if we look at the metals market, this is where it starts to get really interesting. Okay, so I've been watching silver for about a year now, ever since he was up here. I almost bought up here because I thought this was a possible last point of supply, but I'm glad I waited, because what it actually looks like is a much larger accumulation trading range, where this is, you know, here's the anatomy. Here we see two springs, one spring here, major sign of strength. It kind of does this choppy shit, and then it drops below. And what we see here is a really, really nice spring and a retest. Okay, so we see spring and now a retest, and they're both on low volume. So spring was on low volume, retest was on lower volume. And what's really nice about this is it's in the form of a Bollinger Bands W bottom on the weekly. Okay, so just like I was talking about with the S&P 500, first target of the W bottom is going to be the midline. Boom. Second target is going to be this guy. But if this is, if this is a spring, then the next logical move is going to be a jump across the creek, because we see this little creaky thing here. Next logical move is going to be a jump across the creek, which is going to be something that looks a lot like this. A high volume move on high spread that clears the creek. The creek is, this little guy here. It's going to clear the creek and most likely rally to the top of the trading range, or at the very least rally to a level somewhere up here. And it's going to be sudden, and it's going to be very strong. And that is timed perfectly with a lot of the other markets. So if you look at gold, for example, gold is in a really, really nice inverted head and shoulders. So we see, oops. Oh, I can't do, okay, so inverted head and shoulders. Okay, but with an extended shoulder. So we see two shoulders here. So 1, 2, head, 1, 2. And it's really nice. Okay. So this macro play for gold is looking beautiful. If you look at the daily on the Ichimoku cloud, we found support on the 50 EMA. We're pushing up. The Chiku is now through the cloud. I would like to see the Chiku above the price, but beggars can't be choosers. Not the best setup on the daily, but it's definitely not looking bad. And if you look at the monthly, what did I want to say about the monthly? Oh, this 50 EMA would be our next logical test. So, also if you look at the platinum market, platinum looks great too. So platinum is just chilling here at the bottom of this gigantic downtrend, which, let me see, which sure as shit is making a W bottom on the quarterly B band. So the 3-month chart, platinum is making a gigantic bottom here, super clean, and the daily for the cloud is looking really clean as well. So the next, it's riding along this this 50 EMA really nicely. We do see a weak bearish cross here, but take that with a grain of salt. It's at the bottom of a multi-year downtrend, and both gold, or all three, gold, silver, and platinum, could be solid long-term hedges against some of this volatility with crypto and with the stock market. And now let's look at palladium too. Palladium looks really good too. This is NASDAQ, not palladium. What the fuck? Where's my palladium chart? How do you spell palladium? Palladium? How do you spell it? Or is it 2 L's? Palladium? Yeah, there we go. Palladium has just been a monster, right? It just broke a new high here, and if we look at the weekly chart on it, It just looks really, really, really strong. And if we look at the monthly, just really strong uptrend. Palladium looks like a solid buy as well. More importantly, I think gold, silver, and platinum are going to be the plays. Remind me in 2 years to check on this stream and see if it aged well. But so far, the stock picks that I did 2 months ago, I think it was, when I was first talking about, I think I made a video, is the stock market going to crash, or like, is there a recession coming, or something like I made some clickbaity title like that. And I was talking about how the stock market looked like he was making a top, and that FANG looked like he was about to shit its brains out. And no one really believed me, but sure enough, it did. It came down. I can talk about some of the plays that I've been making. Specifically, there are 3 charts I'm really eyeballing right now for a long-term trade. So one of which is this Coca-Cola chart. It's a very clear overbought signal here. It's got this multi-year ascending channel that it broke north of, and it's now starting to retrace. So I'm looking for this thing to, over the course of quite a few months, eventually make its way down here. But I've got some really solid puts at $50 that I've already taken some good profit on. And I think ultimately it comes down to the $42 level. Maybe it comes down here to this $43 level. What I'm hoping for is, because it overreacted so much to the upside, that it actually overreacts a lot to the downside, and that maybe this starts to see a macro top, or does like this head and shoulders thing. But that's just crystal ball talk at this time. Also, we see on the weekly some really strong divergence here. So the SMI has been really good about calling tops. So we see divergence here, call the top, divergence here, call the top, divergence here, call the top. And now once again, we see a divergent top here. So large confluence of evidence there on Coca-Cola. Second one is Caterpillar. It's got a really clean distribution chart, like really clean. And we see, just like with the S&P 500, we see the ICE being represented by the 200 EMA. It broke through it, saw a major sign of weakness. This is kind of what I'm thinking that the S&P 500 and Dow Jones are going to do. They're going to rally up. Or they already rallied up, and now the next major sign of weakness is going to be a breakthrough the trading range, followed by a retest with a failed rally here, forming a last point of supply. But I shorted like right here, damn near the very top, right on that 50 EMA is what I got short on. And now, last but not least, Starbucks. Let's get rid of you. So Starbucks has been on this multi-year, since 2009. It's been on this crazy bull run, and it's now showing signs of distribution here. So we can see it represented by the supply and demand channel, right? So we get this really nice overthrow. Once it comes down, tests the very bottom of this thing, bounces right back up for a buying climax, and now it's going sideways in this really beautiful distribution trading range. At face value, it kind of looks like reaccumulation, but the volume profile tells us a different story here. This is why I like Wyckoff analysis so much, and this is why I heavily emphasize it with my. This is why I was saying, earlier, that my edge with trading are these macro long-term plays, because this is, I think this is what a lot of people overlook. So the volume profile tells us the whole story here. So all these rallies are seeing contracting volume, and then we see on the way down, we see high volume, high volume, high volume, high volume, right? And now, although we do see expanding volume here, what it really looks like to me is this is what we want to see for an up. So it's called a UTAD, up thrust after distribution. It's like a final it's a final short squeeze that pops it well above the trading range so that people can enter short here and ride it down. And that short squeeze was fueled by this massive head and shoulders here. So we see shoulder, head, shoulder. A lot of people went short on this breakout. It slowly climbed up, and then we see here, boom, liquidated. All these shorts just liquidated. So basically anyone that shorted this head and shoulders at any point in time just got evaporated up here, which means that the next logical move is going to be a sign of weakness, or a sign of weakness into a last point of supply. Which means most likely a ride down to the bottom of the trading range. So Starbucks was looking really juicy, and it even has this nice reversal candle right on the retest of this supply and demand channel, which is just like, man, couldn't be cleaner than that. That's beautiful play. So currently I'm actually long on this thing. I'm of the opinion that this is actually going to make a daily M top, or at the very least it'll rally up a little bit higher. So you can see here I have my notifications set here because I've got some calls on it, but I'm personally looking for I'm looking to get short right up here, just one more little dink above the high, and that's where I'm going to go short right up here. And if I don't get short there, then I'll look for a different entry. But overall, this thing just looks brutal. This is going to be a really great play, I think. Oops, that's not what I want. So anyway, those are just some of the stock picks I have right now. I'm obviously watching a shitload, but these are some of the ones that I'm heavily playing right now. All right, my throat is dry. I'm tired. I'm hungry. I'm thirsty. I've been talking for the past almost 2 hours now. If you like this kind of analysis and you'd like to be a part of it, and you'd like to have access to this kind of analysis on a regular basis, go to bitcoinschmitcoin.com and sign up today or tomorrow. If not, I'll keep doing streams. But primarily, I'm mostly looking at these equities markets because they just look so good, especially these metals markets. I'm looking at these I'm looking at these metals markets like, if we look out at the monthly chart of, or I'm sorry, the weekly chart of silver, right? This is look at this percentage move. Like, look how long this has been accumulating, right? If this thing goes on another multi-year run, we could be looking at a significant markup in price. Significant. Say it even just retests the high. That's almost a 250% move. And given the level of accumulation here, it's most likely going to go higher than that. But yeah, the beautiful thing about this is that it moves slow, but the profits are really consistent. So anyway, go to bitcoinschmitcoin.com, sign up today, and get in on the action. I'm not always as active with my streams, but I'm in my trading community all day, every day. So sign up there. Anyway, you guys have a good, I guess the weekend's over, huh? Cool. So I guess the next logical next logical step is waiting for the market open on Monday. I'm really excited for it because it's going to be Cyber Monday, so it's going to be a lot of volatility. So anyway, you guys have a great rest of your night, and don't stare at the charts too long. Bye.